I'm Russell Clark, and this is VixShield's Morning Outlook, where it isn't news till we talk about it. Good morning, traders. We're sitting at the midpoint of the week. Let's check the scoreboard together. Yesterday's risk-on push carried forward with quiet confidence overnight. While retail slept, big money kept the tape steady. Asian markets opened with measured buying. European bourses followed suit. No wild swings, no panic. Just that slow, grinding resilience we've come to recognize in this environment. You know what the big boys did last night while you were sleeping? They held the line on the Strait of Hormuz story. Washington keeps insisting its operation there has wrapped up. The ceasefire is holding, they say. Yet fresh missile activity keeps bubbling up. Sailors lost, vessels stranded. That risk premium on crude refuses to vanish completely. Gasoline prices still feel the heat, up dramatically since the trouble began. And yet equities didn't flinch. Bitcoin pushed toward fresh strength. Crypto didn't care about the headlines. It climbed. That tells you something about the undercurrent running through this tape. Risk appetite is still alive, even with all the noise from the Middle East. Over in Asia, the rebound we flagged in yesterday's close kept building. European trade showed the same quiet optimism. No one was rushing for the exits. Instead, positions were adjusted with patience. That's the part the average investor misses. While the headlines scream about conflict and potential supply shocks, the smart capital stayed focused on the bigger picture. Earnings validation from the tech side, AI infrastructure momentum that refuses to fade, soft economic prints that keep rate cut hopes flickering, all of it layered on top of a geopolitical situation that looks scarier on television than it feels in the order flow. Which brings me to the scoreboard for our week so far. Monday, we watched the weekend tension ease. Tuesday delivered that solid risk on follow through. Today, Wednesday, we're taking the temperature at halftime. Are those early week signals aging well? So far, yes. The volatility compression we saw yesterday continues to hold. Our methodology thrives in exactly these kinds of measured checkpoints. Not too hot, not too cold. Just enough edge for those who know how to read it. Here's what the talking heads are pushing this morning. They're replaying the Iran drama on loop. Warnings about $5 gasoline. Dire predictions on inflation pass-through. One bank after another tossing out their rate cut forecasts like yesterday's news. And of course, the fear index chatter. Yet here's what's really happening. The market has already priced in a lot of that noise. VIX compression tells the real story. The term structure remains in strong contango. That means the market expects volatility to stay contained in the near term. It's the kind of setup where premium sellers have historically found their edge. Big media wants you scared, folks. They need the clicks. They need the fear. Because fear keeps eyeballs glued and narratives flowing. But we see through it. Remember what we discussed in yesterday's close? That geopolitical premium on energy failed to derail the broader risk-on tone. Ceasefire hopes, even if fragile, kept the tail risk in check. AI-strengthened chips, like Intel and AMD, kept the Nasdaq pushing records. Soft PMI data, still expansionary, despite missing estimates, left the door open for policy flexibility. The big money used those fear narratives as contrarian fuel. While retail debated whether the world was ending, institutions kept accumulating on dips. That's the trap they set. And that's why our community stays ahead of it. Step back for a moment and look at the geopolitical landscape. The Strait of Hormuz remains the focal point. U.S. military and diplomatic efforts are intensifying to keep that critical waterway open. Washington says the Iran operation has concluded. The ceasefire is holding. Yet renewed tensions and missile activity keep that risk premium intact. It's functioning like a stagflationary input. Higher energy costs, acting as a tax on consumers and corporate margins. Goldman Sachs highlighted potential acceleration in European electrification as a counterweight. Fed officials like Barr have warned that gasoline spikes could bleed into broader inflation readings, despite America's relative energy insulation. At the same time, domestic policy signals add another layer. Pressure to adjust Senate rules. Talk of Project Freedom aimed at reopening oil transit. These things create uncertainty. They raise the potential for sudden volatility expansion if execution falters. Yet the market's reaction so far has been remarkably disciplined. Equities grinding higher, volatility measures sliding, Bitcoin breaking toward key levels again. This isn't random, it's the market digesting headlines through the lens of actual capital flows. The fragility curve we talk about applies here too. The bigger the narrative gets, the more stress it puts on weak hands. But our approach accounts for that. We don't chase the noise. We position with the math that has been battle tested for years. This is exactly why our iron condors are built for days exactly like this. The setup rewards patience. It rewards those who let the methodology do the heavy lifting instead of trying to outguess every headline. Our RSAI engine has spoken clearly this morning. Entry criteria are met. Both gates opened for a place signal. That matters. It means the combination of expected daily range and volatility readings aligned in a way that gives us confidence to engage. Conservative tier is solid. Balanced tier offers opportunity with eyes wide open. We listen to what the system says. We don't override it with emotion. That's what separates us from the retail crowd that gets chopped up trying to predict headlines. VIX at 17.15, elevated but still below 20. Conservative tier is green, safe to place. Balanced is yellow, tradable, but size down if you are cautious. Aggressive is yellow, tradable with extra caution. Our Rapid Skew AI engine, RSAI, has verified the conditions. The contango we see in the term structure supports premium collection. Strong contango like this is favorable for iron condor traders. It signals the market expects volatility to remain range-bound near term. That's our edge. Time decay, working in our favor, while the big money sorts out the real risks from the manufactured ones. And that's why you are here. This is why we built this community. You can't talk about these setups at the dinner table. Your family doesn't get it. Your co-workers don't understand the quiet satisfaction of watching a well-constructed position expire exactly as designed. But we do. We're the insiders, folks. While everyone else is guessing, we're executing a methodology 20 years in the making. Russell Clark's framework, distilled into daily battles we fight together. When the Strait of Hormuz flares up, we don't panic. We check our gates. When banks scrap their rate cut forecasts, we don't chase the narrative. We look at what the VIX is actually doing. This tribal knowledge is our protection. It turns uncertainty into opportunity, one disciplined day at a time. We've seen this movie before. Last week we talked about watching how geopolitical choke points interact with AI momentum. Well, here we are again. The ceasefire holds just enough to keep volatility from exploding. The energy shock persists just enough to keep everyone honest. And our iron condors sit right in that sweet spot where probability favors the patient trader. That's not luck. That's preparation. That's why loyal listeners keep coming back. Because this isn't just another trading show. This is a fellowship of capital preservers who understand that protection and income generation can coexist when you follow the math instead of the madness. Here's what we're watching closely today. First, any confirmed developments on the full reopening of that strait. If diplomatic efforts gain real traction, that risk premium could evaporate quickly. Watch how energy prices react. That will tell us plenty about whether the inflation transmission fears are overblown. Second, consumer confidence data due out shortly. In this environment, any material deviation from expectations could inject some volatility into an otherwise quiet tape. Third, keep your ears open for policy signals out of Washington. Filibuster talk, Project Freedom updates, anything that shifts the probability of accelerated fiscal moves. Those are the things that can flip the volatility regime faster than headlines suggest. We'll be back at close to review exactly how it all played out. Until then, stay measured, stay disciplined. This midweek checkpoint feels like one where our methodology should shine if we stick to the plan. The big money wants you emotional. We want you prepared. That's the difference that compounds over time. And be sure to listen for any breaking news from Miss Vicky. These signals and insights are for educational purposes only and are not financial advice. Past performance is not indicative of future results. This is VixShield, your daily protection against market uncertainty.